Hey guys, Tony Benson here with Wealth Builders HQ and creator of Patterns in a Flash. Going to do a quick review on the pattern of the week from last week and see what else is still on the radar. But before we get there, we've got to get the disclaimer out of the way. I am not a registered broker or investment advisor. I will not give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do mention a trade, just assume it is a paper trade or practice trade. For regulatory reasons, we do not discuss funded trading. So we're going to look back at the inverted head and shoulders on CTSH and a descending triangle on J&J. We will start with CTSH, and it is still there. You can see it's actually a pretty nice looking head and shoulders. Got the left shoulder here, the head, and the right shoulder. Still waiting for it to play out, but it is not. It did not break above the neckline, which is right there. Basically, it's $70. So, and this is one reason. This is a perfect reason why waiting for the break of the neckline is important. Can't tell you the number of times with a regular head and shoulders, a couple of times with inverted, where I have jumped the gun and look, there's the pattern. It's there. I'm going to get in and don't wait for the neckline. And then what happened? That neckline of 70 is resistance, right? It hit it and it's rolled off so far. It might still break above it, but at this point, it's still below it. So we had no confirmation. I can't tell you the number of times I got into something early expecting it to break and it did not, and it uses that old support or the old resistance, and then you get stopped out. So it is most of the time. There are times if I have some other clue or some indication that it's going to break or it might break or it probably will break, if I have the odds on my side, I might nibble at it. Sometimes I'll just pick up 1 or 2 or 3 contracts early. And if you like that, if you're afraid that you're going to miss the move, or you won't be able to be there when it moves, if it moves, then I'm okay with that. And that's why I say sometimes, a lot of times, and it confuses people. I go, I'm an aggressive trader, but I'm also very conservative. I'm like, how can you be both? Because sometimes I will get in a really, really aggressive place, but I'll just do it with a really small position. Even just one contract sometimes. It's like, this is a little early. It's a little bit too aggressive. It's more aggressive than I usually would do. But if I just pick up one contract, I don't have a lot of risk. And so if it does go against me, it still doesn't cost me a lot, right? So it's a conservative way to trade in an aggressive fashion. Get in an aggressive entry point, but with a really small position. However you want to word it. So we're still watching this. It's still on the radar because it very well could take off to the upside. So we shall see. J&J, a little different story on this. This is of course, that's the day we looked at it. Look at it, a descending triangle, right? And if it broke below that 170 level, well, it broke. And it broke big on that day right there. It did the next morning. I remember seeing this and went, pretty decent. But, yeah, it will hit like in the first 10 minutes of the market. And then it turned over and just dropped really fast. So this one, in the first 10 or 15 minutes of the market, was already at 166. It was quite a ways away. I remember thinking, I'm going to wait and be patient. And if it turns around and rolls back up to this level, it comes back up to this 170, which you can see it's done. So now, if it rolls back over, now I can put a hook down here at 167.84. Maybe even, we'll see what kind of clues it gives, any kind of indications. If it dances around here, if it gives me any kind of bearish candlestick signal, right here at this, not only the resistance, the downtrend line, but we've also got a convergence of the 170 level, which is not only a round number, but you've got the horizontal support and resistance level there as well. And I think, the 200-day moving average comes in right there as well. So this is it's going to take a lot of momentum for this thing to get through this level. There's a lot of headwind right there. So I like it right here. If it rolls over, or like I said, if it stalls out and it dances around here for a little bit and then starts to drop, I personally would be all over this. So we'll be keeping an eye on that. Let's jump back and look and see what else. Abbott is still on the radar. We're still, and you can see on a daily it's not as clean, but on the weekly chart, not only have we broken the head and shoulders, we've come back up to the neckline. We're kind of dancing around that area, but you'll also notice that this long-term trend was broken back here a little bit ago. So the fact that we're below that trend line and we've got a reversal pattern, we've got a head and shoulders, it's broken the neckline in a big way, in a very fast way. It came back up, tapped it. It did try to get back above it, but so far it's basically just kind of sitting on that line. And this is one of those that's a longer-term trade. For me, it is. I did pick up some positions for myself and for my kids' account. A longer-term move looking for 88.50. I think I bought 6 or 8 months of time, if I remember right. So we'll see what happens. If it drops super fast, then that's even better. If it doesn't, then oh well. Affirm, this is one. This will come off next week. This is one that we looked at several weeks ago, and actually it's dropping back down anyway, so I should have probably taken that off this week. It was good. It played out exactly the way we wanted it to. And if you haven't been following this, if you haven't been inside patterns in the flash and getting the pattern of the week, this is one that on that vertical line is when we talked about it. Little double bottom, little tiny bit of an ascending triangle. I did catch a little bit of this and banked a small profit. I'm kind of kicking myself for not getting back in here, but I didn't pull the trigger. I remember looking at it and going, yeah, it just didn't look that spectacular. It obviously would have played out. I left it on. I chose not to jump on that one. Obviously, I'm kicking myself. I wish I would have, but, woulda, shoulda, coulda, right? It's a dangerous syndrome. IRT, this is one I still love. Another Head and Shoulders. Broke it big time, rallied back up, has tapped it a couple of times, and it's back on the downside right now. So it's dropped big the last couple of days with a pretty decent increase in volume. So another one that is still on the radar. And NIO, this one will come off next week. This is a perfect example of one that, it's triggered the entry if you look at the orange line several times, and it would have stopped out. So I didn't play this mainly because I knew earnings was coming, and it's still coming. It's out today, it looks like, according to this. I don't know if it was this morning or if it's aftermarket, but or Monday, whatever the case, whatever that day is. So most likely would have traded this anyway with earnings. Maybe this one right here would have gotten stopped out, but it is what it is. So that'll come off the radar next week as well. But with that being said, we're going to call it a day. And just remember, if you're going to fail at just one thing, fail at quitting. Take care. God bless. Bye-bye.
Folks, thanks for watching. I hope you enjoyed the training. Now, if you did, be sure to give us a thumbs up and go ahead and hit the subscribe button right over here and hit the bell to keep up with all the latest trading content. And did you know that we have a podcast? Supercharge your trading education with the Stock Market Millionaire, which you can find in the description down below. And while you're there, you can also find other amazing free trading resources that I put together just for you.